Let's go! That's right, today's one of those mornings you wake up and you just say, let's go. What a day. What a day so far. As I said, obviously these earnings reports this morning are going to dictate how the market's rocking, and, well, we had some good ones. We'll get into those for sure. We'll entirely see how things go regarding, obviously, with the new phase 1 of the trade deal. We'll have an impact this week as well, but for the most part, I think these earnings can absolutely carry us to a solid day. All the indices trading around are trading positive right now, or I think 10 out of the 11 at least at the moment. Gotta love it. Or all the major indices, at least Dow, S&P, and NASDAQ, are all around 1% up now, so it's pretty exciting. Older article, but yep. We're just going to go right into some of these people. Make fun of just a couple people. Why not? JP Morgan. You already know JP Morgan beats by 23 cents a share, and revenue up 8% on the year, beats by 1.7 billion. That's crazy. Crazy good news if you ask me. I don't care. I don't own any JP Morgan Chase shares, but guess what? That's fantastic news for everyone, because you want these big companies to be succeeding that way, especially in the financial industry. You really do. Charles Schwab. Big shout out to whoever told me in my video about buying some TD Ameritrade shares. They said, hey, Charles Schwab's a good pick. It's the way to go. And guess what? Right now you'd be making some money already, so I appreciate it. I didn't purchase any. I apologize. I should have listened. You were right, though. Charles Schwab beats by, 10 cents per share. Got it. Revenue beats by 60 million, up 5% year over year. Good. Good stuff. Investors are investing. Look at that. Gains 2.5% after Q3 beats by a dime. Pre-tax profit margin of 4.5 or 45.6, down a little bit, but net interest revenue increased. You got that right. Gotta love it, love it. All right, trading income fell 1%. You know what? That's okay. Overall, good job, Schwab. Guess who I get to make fun of now? Goldman, eat my sack. Yeah, that's right. Eat my sack, Goldman. You suck. Missed by 9 cents a share on the EPS, down 5.7% year over year in revenue. Shares are up? What? Excuse me? They're not up right now, but they were at the time of this. Screw Goldman Sachs. So that's all I can tell you, really. That's what they get. Now let's get back to positivity. Just had to throw in some negativity in there just to make fun of these pieces of garbage for always trying to make my stocks go down with your stupid ratings that you have no clue what you're talking about, analysts. United Healthcare beats by 12 cents. That's right. Healthcare. Even healthcare's rocking it right now. Up 6.7% year over year revenue. $510 million beat. That's right. United Healthcare up. And you know what that means? The entire healthcare industry is going to be up. On top of that, you already know it, Johnson & Johnson beats by 11 cents. 11 cents a share beat. What? Revenue up 1.9%, beats by 590 million. Johnson & Johnson is one of the most stagnant companies of all time. They don't move up or down. They just pay a consistent dividend and they rock it. Guess what? They're rocking these earnings, so they're going to be moving up. And they did today. They have today. That's fantastic. Just fantastic for really the whole industry. Healthcare and consumer staples. They're just fantastic. We're going back to financial again, because why wouldn't I? BlackRock beats by 16 cents. What are you talking about? Revenue up 3.1%. Whoa. Whoa. All I can tell you is a vast majority of these earnings that came in were positive. And I love that. I love it, love it, love it. Everything about it is just I mean, it's starting off making me feel happy for this earnings season. I think we're going to have a good time, and we could see these stocks rise. Just in total, the whole market's going to go up when companies like this are beating, and that's what we need more of. Obviously, I think, as I stated, there's a couple more that are going to be interesting to look at over the week. We'll take a look at that and see what kind of a rippling effect they have. There's a lot more financial companies to report this week, so we're going to see. I've got great news for you. We're done with these earnings news. Yeah, I'm bringing back Neo. Neo News, baby. My newest series, Neo News. Neo says it launched an update to its advanced driving assistant system. New features including traffic jam pilot and auto lane changing. Auto lane changing? You heard that right. That's what I'm talking about. Neo isn't playing around, okay? Neo isn't playing around. They're gonna do what they have to do. I'm gonna click on this. What is that gonna do? We launch update Neo Pilot. Oh, look at this guy. Look at him. Look at this. Okay, you're driving, right? And then, oh, okay, that's a very big little intersection. What the? Oh, that's right. Look at that. You know where you're doing. It knows there's a car in front of you. You already know it does. Look at that. It's telling you there's a car in front of you, right in front of you. Woohoo! And this is their practice facility for lane changes, baby. You know they're testing it out, and they're rocking it. Neo News. But what's holding Neo down? They actually are up today, okay? What's holding Neo down? Screw the Chinese auto market. Chinese auto sales fell 6.6% in September. Man, my hope is that there is a bottom out in this Chinese auto market and we actually rise. We need to see some rise here in this Chinese auto market. Instead, it's a piece of garbage. If it does rise, my boy Neo's got a chance. Ooh, I'm hyping up Neo like no other. Let's go.